Hi there, QuickBooks experts. I hope all is well, and I pray that as you're viewing this video that you're in the best of health and spirit. In this video, we're going to cover Chapter 8, Establishing Budgets and Preparing Bank Reconciliations from the QuickBooks Online for Accounting 2026. Upon completion of this chapter, you should be able to add up budget amounts to create a budget, create profit and loss budget reports, and reconcile a checking account and print a reconciliation report. So in Chapter 7, we added payroll activities, we added employees, added payroll related accounts, and we also recorded payroll expenses and liabilities to our Wild Water Sports Company. In this chapter, we're going to add a budget, we're going to add a profit and loss budget report, and we're also going to add or complete a bank reconciliation for the Wild Water Sports Company. All right, so much like a budget in your everyday life, businesses, they have budgets as well because they essentially want to set themselves up for success. And a lot of times, the reasons why most businesses fail is because of cash flow management. So essentially, the main purpose of a budget is a financial plan that helps to outline exactly how the business expects to earn money and how the business expects to spend money over a specific period of time. And this could be monthly, this can also be annually, even weekly. So again, a lot of the concepts that we are learning in this QuickBooks course, it can also apply to your personal life. So we're going to jump right in to verify the accuracy of your Wild Water Sports Company. So this is a very key step. As you move through these different chapters, you cannot move forward with the chapter unless your trial balance is correct. So the first thing you're going to do is sign in. I'm already signed in. We see here on this right screen. And then we're going to click reports. If you have it saved as a custom report, then as soon as you click on this, you'll see all of your custom reports saved. So that way, once I access the screen, it already has the date preset and everything pretty much good to go for me. In the event that, let's say, you never saved it as a custom report, and when you click custom reports, nothing shows, no worries. All you basically need to do is once you get to the trial balance and you set the date, you scroll over to the right, you select save customization, custom report name, and then you can basically just select save. So that way, every time you go to custom reports, you'll see it. So you scroll down, and again, this is the starting point. Much like when you're building a house, the foundation is the most important thing. If that foundation is not firm, it is not strong, eventually the house is going to crumble. The same thing. Checking the trial balance at the beginning of every chapter is the fundamentals. So in the event that you are starting a new chapter and your trial balance does not tie to what is in the book, you cannot move forward. You must figure out what needs to be fixed. So please keep that in mind. All right. So in regards to checking the trial balance, the first thing that you always want to do is make sure that the total debits and credits tie. So we see here, total debits and credits are $751,000. $9.66. Perfect. So that ties it. And the next thing you start to do is to check each account balance. So checking, AR, inventory, payments to deposit, prepaid expenses. I normally do them based on debits and credits, equipment, furniture and fixtures, investments, etc. So you go through all of them one by one to make sure everything ties. I've already checked all of my accounts and everything ties. So once you confirm that all of the account balances tie, you're free to go from there. So in this section, we're going to establish a profit and loss budget in QuickBooks Online. And as we know, the profit and loss, often referred to as the income statement, this tracks the amounts in income. And income, also referred to as revenue, that reflects the way in which the company earns money, right? Simply stated. So if it is a restaurant, how do they make money? They sell food, they sell drinks. If it is a barbershop, how do they make money? They cut here, right? So it is specific to the business itself. So income, again, that just reflects the way in which the business makes money, whether they are selling a product or providing a service or both. And then we have expenses. In order to make money, you need to spend money. So what are some of the costs that are associated with making money? So that's what we're going to see in our profit and loss, aka our income statement. And QuickBooks Online is going to interview you to determine the budget amount. And we're going to create the budget from scratch since we have no historical amounts in QuickBooks Online. So to create this profit and loss, We're going to do the following, continue from above. I'm already logged in, so we're good to go from there. We're going to go to our navigation bar. Sorry about that. All right, so we're going to go to our navigation bar. So we have two options. We can either go, we can look for it. Let's see here. Settings, there we go, perfect. All right, so as we know, the gear icon, because I'm splitting the screen, that's why it looks like that, the three dots. But in the event that, I'm just using a full screen, we click here and then we'll see tools. But because the screen is split, that's why we essentially see the three dots. So we go to our settings and under tools, we select budgeting, or you can type in budgeting and then it'll take you to budgets. Right? So settings, we go to our tools and select budgeting. And now we're going to select create a budget. So here it says plan with better budgets. You manage all your profit and loss and balance sheet budgets in one place. They also have a video. Once you select it, it asks, or it shows you rather, how it works. You can use the latest data that's available in QuickBooks to make the budget. You can see if you're on track by comparing your actual performance with budgeted numbers. So again, this is just like how you would use a budget in your everyday life. I myself, I'm trying to put myself on a budget. Okay, let's say my budget for, buying food every week is it cannot exceed $75. If I spend $100 in a week, that lets me know, hey, whoa, I went over my budget. Versus if I spent $50 in another week, that means that I was under budget. So you essentially have something to compare it to, a benchmark to let you know if you are on target or if you're off track. And lastly, you can also bring in profit and loss budgets created somewhere else into QuickBooks. So in the event that, let's say, you were using another budgeting platform or you were using Excel, you can import the budget. As you see here, the budget type, the time period, the budgeted format, whether it's consolidated, and if you click on or you hover over rather the I, it lets you know this can be an organizational level financial plan, or if it's subdivided, and you can create individual budgets based on location, class, department, or customer. So this will be like for a very large organization, one organization that has a budget for the accounting department and then a budget for the marketing department and things of that nature. You can pre-fill the data. So this is if a company just has to import a budget, but in this case, we're not doing that. We are creating a budget. So with that being said, we're going to select fiscal year 2027. And we're going to create it for the profit and loss. And we are going to select a consolidated budget. So from there, we select next. And it's asking us to click the pencil icon to the right of the budget FY27 P&L. And then we're going to change the name to budget 1. So if we see here, we're changing the name, deleting that, naming it budget 1. And it's asking us to make sure that the compare or reference data option is not selected. So it's asking us to toggle this off. And then from there, we're going to click in the January 2027 sales account. So here we see sales, and we're going to type in $180,000. And then from there, we're going to select copy across. So in order to copy across, we click this right facing arrow, and it's going to copy the value across the row for every month. So pretty much saves you some time. So from there, we're going to type $5,000 in the January 2027 service revenue text box. So we input $5,000. And then per the instructions, we're going to copy across again. So we select the right facing arrow. And then from there, we're going to click the yearly button to view year by year. All right, so a few things are missing here. Give me a second. So we're going to scroll over. This is the problem sometimes with the split screen. All right, so what I'm going to do is make this a little smaller so that way some of the features are not hidden. All right, so with that being said, we're going to click yearly. So now we essentially see on a yearly basis, we anticipate our sales to be 2,160,000 and our service revenue to be 60,000. So when we add the two, that gives us $2,220,000. So then when we switch it to monthly, this essentially takes us back to where we were. So we're going to click the gear icon and we're going to uncheck the hide empty rows column. So this is our gear icon. We select there, we hide empty rows, then we select apply. So we only see the rows that have amounts in them. Because again, if we just show everything, this business doesn't have billable expense income. They're not selling certain products. And when we are selling products, we label it as sales, not as sales of product income. And again, this is just a budget, right? So you can tailor it to however the business wants. So we scroll down the budget worksheet and we type additional January amounts. So for our cost of goods sold, all right, we're going to make these amounts a little bigger. Oops, sorry about that. Oh, well, here we are. All right, so let's input this information here. So for the cost of goods sold is going to be 135,000. So what I would suggest doing before you select the hide empty rows, first input the information and then you can go from there. So scroll down for January. So we have January cost of goods sold 135,000. We have advertising and marketing of 10,000. We have payroll expenses of 11,000. Interest paid of 2,500. Sorry, I missed that one. 2,500. We have equipment rental of 5,000. Supplies of 3,000. Internet and TV services of 4,000. Phone service of 2,000. And vehicle, gas, and fuel of 1,000. All right, perfect. So we select the gear icon, hide empty rows, and then from there we should only see the amounts or the categories rather that have amounts. And then from there we select yearly. And then from there we select save and close. So I just want to make sure that everything was input correctly. All right, so we have our cost of goods sold of 135,000, advertising and marketing 10,000, interest paid of 2,500, payroll expenses of 11,000, equipment rental of 5,000, supplies of 3,000, internet and TV of 4,000, phone service of 2,000, and vehicle gas and fuel of 1,000. Perfect. So we're good to go from there. So the next thing we do is select save and close. So we've entered our budgeted amounts and we've stored them in QuickBooks Online, and now we're going to view our budget reports. So QuickBooks Online has two basic budget related reports. The first is the budget overview, and then we have budget versus actual. So similar to the example that I was mentioning earlier, in your personal life, if you have a budget, that's basically providing you with a benchmark to let you know if you are off track or if you are on target. So with that being said, we're going to go to our reports. And we see the overview reports list only the budget data, and the budget versus actual is going to compare actual transactions that have been inputted into QuickBooks Online. So to view our budget report, we're going to continue where we left off. We have not logged out. We're going to click the reports and then we're going to type budget in the search box. And we're going to select budget overview. And then from there, it asks us to customize. So from there, we're going to click rows/columns. We have that down, and we're going to select accounts versus total from the show grid. So this is our show grid. And then we're going to click run report. All right. And then from there, it asks us to collapse. So we search and we see, all right, perfect sales is 2,160,000, service revenue of 60,000. And then from there, we see our cost of goods sold. Okay, one thing that we did not do, I'm going to go back to my budget. One thing that we did not do is to copy it across. So we're going to copy it across for all months. So we're just going to scroll down and just copy everything across. And typically in the real world, these amounts, might change, especially, given a business, let's say like a tax preparation business, right? Utility. Typically within those first few months, January through April, and then in the extension season, let's say from August to October, that's when the light bill might be the highest. Why? Because there's more activity in the building, right? There's more staff that's in the office trying to crank out the tax returns. So from May through, let's say, maybe June, July, the light bill might not be as much, right? So this ultimately depends on the company. But for example purposes of just teaching you how it's done, that's why we're just copying it across, and we're just assuming that the budget is stable the entire way through. All right, so just want to make sure we copy them all across. Perfect. So save, close, and now we're going to go back to that budget report. We go back to our reports. We're going to customize it again, show grid, accounts versus total, and we are going to collapse. Perfect. All right, so now when we compare it to what we see on the screen, everything essentially ties. We have our total income. As we see, 2,220,000. We have our cost of goods sold of 1,620,000. We have advertising and marketing, interest paid, payroll, rent, supplies, utilities, and vehicle expenses. So once we factor everything in, we anticipate, okay, perfect, for the entire year, our sales is going to be 2,220,000. After our cost of goods sold, we anticipate a gross profit of 600,000. And then after all of our other expenses, we anticipate a net income of $138,000. So from there, we select customize. We select without cents. And then from there, we select run report. And now it just looks a little more, clean for the most part. So from there, we select save customization. And then we name it budget overview. And then from there, we select save. So now we're going to go and look for the second budgeted report, which is our budgets versus actual. So we go back to our report list and we go to our budgets versus actual. From there, we select collapse. And we click customize to modify the budgets versus actual report. And then it also wants us to change the date. So the date is going to be January 31st of 2027. And then we're going to click the rows and columns. This is already open for us. And it's going to be the accounts versus total. And then we also want to select it without cents. So this is essentially what we should see. From there, we select run report. And from there, we can see this is our actual sales to date, 164,000. And this is our budget. And it lets us know, are we over budget or are we under budget? So this is the power of having this budget. It essentially lets you know, again, if you are on track or if you are off track. So here we see, all right, we actually to date have net income of $11,969 and we budgeted $1,500. So that's good. We're $469 over, but we see that if we look a little further, there are some, areas within our budget that we are not on track. So vehicle expenses we anticipate is going to be $1,000, but we see for the month of January, we actually spent $1,600. So now we know that accounting, we have different branches of accounting. We have financial accounting and we have managerial accounting. So financial accounting, this is essentially where externally users are using the financial statements to make decisions, right? So we think about this, the shareholders, we think about investors, we think about lenders. They're using the financial statements and ultimately they are going to make a decision based on the financial statements. But then we have what's called managerial accounting, and this is where internally management is going to use the data to make certain decisions. So, let's say I'm management, I'm looking at this and I want to figure out, well, why is there this $600 discrepancy? Maybe it's something out of our control. I remember there was a period of time a few years ago where, gas prices were astronomical, right? So much so that when it came time to file taxes, there were two different rates for the standard mileage rate because there was a period of time during 2024 or 2023, whichever year it was, whereby the gas prices were extremely high. So that could be something out of our control, or maybe, it's not one of those one-off nuanced situations, and maybe, our drivers are just going to gas stations where, it's pretty pricey. Maybe they can work out, a situation whereby there's a specific gas station that they go to because they know the price is cheaper. That's typically what I do in my everyday life. I live near a BP, but it's about 40 cents to 50 cents more than a location close to my son's school. So what do I typically do? I'll strategically plan that I'm going to fill up the tank whenever I'm near his school because I save between 30 to 50 cents every time I fill up per gallon, right? So all of these different things, this is the purpose of having this budget versus actual, that from management's perspective, they can now decide, hey, we need to do better. Here we see advertising and marketing. We budgeted for $10,000, but we didn't spend anything as yet. So now we can also compare it, right, to our income. We budget that we want to make 185,000, but we've only made 166,000. So maybe it might make sense for us to spend a portion of this $10,000 in hopes that the advertising and marketing is going to bring in some more income. All right. So just want to provide some insight. I don't want you to just go through this material just to get the work done, but for you to get a better understanding of exactly why businesses even go through and take the time to prepare these reports. All right. So we save the customization for the budget versus actuals. So we save customization, pretty much just delete that. We click save. We are good to go. So now we move on to bank reconciliations. This is a very, very, very key thing for a business to do, right? So good internal controls requires frequent reconciliations between the bank records and a company's records because sometimes there might be some discrepancies between cash receipts and payments. If you've ever been there, right? There have been, before I was not good at tracking my money, right? But I often hear people say that you cannot, manage what you don't track. And that is the God honest truth. And there'll be times where, I'll go out and I'll purchase something. Let's just say, I check my bank account and it shows me that I have $100. So I'll say, okay, hey, perfect. I'm going to go out. Let's just say I went out to eat or I went out to purchase something and I spent $70. In my mind, I'm thinking, perfect, I have $30 left. But what I did not remember was that I paid a $50 check and it just didn't hit the account as yet. So now the next day after the account hits, I now went from thinking I had $100, spending 70, thinking I had 30 left, but because of that $50 check that I forgot about, I now have negative $20. And depending on the bank that you have, they'll probably charge you an extra $35. So now I'm $55 in the hole. Right. So that's why bank reconciliations are very, very important simply because of timing deposits, timing differences, rather. If I go and I deposit a check into the bank account right now, maybe it'll take, a day or two, 3 days. So I know that I just deposited this $300 check into my bank account, but it doesn't show as yet, right? Likewise, if I write a check to someone, the bank it has not fully processed that payment, but I know eventually that $50 is going to come out. So with these timing differences, that's why it's very important to complete and prepare bank reconciliations at the very least on a monthly basis. So these bank reconciliations, they can be completed by someone other than the accountant or the bookkeeper that is responsible for maintaining accounting records. And this process involves comparing items that appear in the checking account with those items that appear on a bank statement. So the bank records, the bank statement, that's an external record. The company's records, that is internal, what we keep. Some companies, they use QuickBooks, some companies use Excel, some use Wave. Whatever accounting software, doesn't matter. You're going to compare your records to the bank's records. So deposits that appear in a checking account but don't appear on a bank statement, these are deposits in transit, right? It's eventually going to hit the account. Checks that appear in the checking account but don't appear on the bank statement, these are referred to as outstanding checks, and they'll usually appear as checks on the next bank statement. In QuickBooks Online, if you ever discover a deposit that's recorded by the bank but not recorded in the checking account, there might be an error in the checking account. So in such case, you would correct the checking account by recording a deposit. And likewise, if we see that there was a check recorded by the bank but not recorded in our account, then in such case, we'll correct it. In the following example, let's just assume that everything was just straightforward. There were no errors. But bank reconciliation is definitely a great way to discover if there were errors. Sometimes things are duplicated in QuickBooks Online and you won't catch them unless you perform a reconciliation. So we're continuing from above. We're going to make sure that the navigation bar is open. We click the gear icon. We select reconcile under our tools. And then from there, we're going to select get started. And then let's get reconcile. All right. And I know I moved a little fast, but as you are going through the reconciliation on that first screen, it asks you if you want to, watch a video. Let's see if it'll show up. Okay, no, because I already went to it, but you can take the time to watch the video. All right. So we don't have a cash account, but we have our checking account, and we're going to reconcile our checking account. So typically you reconcile any of the bank accounts. You also reconcile rather any of the credit cards, any of the liabilities that you're making payments towards and things of that nature. So we have our beginning balance. Perfect, that ties. Then we enter our ending balance, which is $103,396.77 as of January 31st, 2027. So we start reconciling. And then from there, we see a list of transactions, right? We have our deposits, we have some checks, some bill payments, etc. So here we see, after review of the company's most recent bank statement and a comparison to the company's checking account, we discover that some checks and payments that were recorded in the checking account, that they did not appear in the bank statement. So we're going to click on the payments tab, and it's telling us to place a check next to all checks and payments except for checks 1011, 1012, and 1013. So what I would do to make it easier for myself, I would select all of them, and then I would just unselect 3. But I mean, if you want to go one by one, different strokes for different folks, I just like to make things a little easier, right? Well, whatever works for you. So place a check next to each of them. Again, 1011, 1012, 1013. Those did not yet clear the bank. So what that simply means is that we gave the check to Ryder, to Donna, to Karen. They just didn't deposit it yet, right? That happens to me very often. I get checks and sometimes I don't deposit them for maybe about 2-3 weeks, right? So with that being said, the company, however, they still need to be aware of the fact that they issued this check, because if they forget about it, and let's say, Ryder only has $900 in there, or Wild Water Sports rather only has $900 in their bank account. If they go out and spend more than $9.11, their bank account is going to go negative, because the reality is, yes, it shows that they have $900, but because of this outstanding check, once Ryder deposits that money, there's only deposits that check rather, there's only going to be $9.11 left. So very, very important practice to reconcile. So after a review of the company's most recent statement, we see that all deposits and other credits appear on the bank statement. So we go to our deposits tab and we select all three. Perfect. So once the reconciliation ties, you should see 0 and a check mark. So once we see this check mark and that there's a 0 difference, that means that we are good to go. Our company's records matches the bank records. So now when we go to our all tab, our account is reconciled because again, we see this 0 balance. We have our beginning balance plus our deposits minus our payments equals our cleared balance, which should tie to our ending balance. So once we've reconciled the checking account and the 0 difference is displayed, we'll select finish now, and then we select done. All right, so now from there, it's asking us to click the text history by account. And then from there, we see a summary of all reconciliation reports. So as you're working with companies in QuickBooks, sometimes you want to see, hey, did they ever reconcile any of these accounts? So you can select all dates and it'll show you all of the reconciliations that have been performed to date. So the next thing it's asking us is to click view report. And then we can place a checkbox and hide additional information. So we hide that. And then it pretty much just wants us to compare, this statement to what is here. Here we see the registered balance, 99,000. I know it's a little small. So I'm going to share screen, 99,358.88. That ties. And then we're pretty much good to go from there. So then from there, it's asking you to, print it. You can print it. You can save it as a PDF. Totally up to you. All right, so this brings us to the end of chapter 8, where we've prepared a budget and we've also completed a reconciliation. So in this chapter, we created a profit and loss budget for 12 months. We've prepared a budget overview report and a budget versus actual report. We've also reconciled the checking account. And in the next chapter, we're going to work with adjusting journal entry. So this brings us to the end of chapter 8.